I don't have time to make a full daily review today, but I'm just gonna go over my trades. First, we have a three-bar micro channel, 5, 6, and 7, and throughout my back testing, I'm doing a really in-depth study on pullbacks, and I do think the easiest thing you can do is just take the three-bar micro channels that all the bull bars close above their midpoints, and go study the pullbacks. Find out everything about the pullbacks, the length, the you know what bar size is, everything. And I know that there's a very high chance that we get at least a 25% pullback. I'm not really going to share exact probabilities, but I know there's a very high chance of us getting a 25% pullback anytime we get this set up. So entered at 25% right here, and I ended up exiting. I took the trade for a swing because we had an open gap with yesterday's high. We had an open gap with the 6 high and 8 low. So I bought, just basically taking a chance that it was a possible bull trend day. I didn't know what it was going to look like, but I was just assuming we might try and get up towards the all-time high. So I thought we might go a little higher. I also bought as 14 was pulling back, so I added to this position and I added more above 16. And then I ended up getting out on the close of 23. The reason I exited on the close of 23 is we hadn't had 3 consecutive bear bars yet. Look, no 3 consecutive bear bars. And then we have 3 consecutive bear bars. I think it's also logical to just stay long and exit below 24. If you were long for any reason, you got out below 24, I think that's a reasonable trade. Also, bar 15 was a pretty big bear bar. A lot of traders would get out below that. I decided not to personally, just because I thought, open gaps, I thought the bears might need one more bar. But if 16 was not a big bull bar closing on its high, I was just going to get out. So I got out on the close of 23. And had I decided to stay long instead of getting out, I would have gotten out below 24. So I think bulls have to exit below 24. And when bulls have to exit, we should get a few legs sideways to down. We got 3 legs down to bar 32. And if you look at bar 32 on a lower time frame, there's a pretty sharp reversal up. I watched it happen I was still obviously looking at the 5-minute chart, but I guess this isn't the best example of what I'm talking about. It was a pretty sharp reversal up, though. I'm not gonna get the kind of chart. I'm sure there's some 30-second, 40-second chart that will show what I'm looking to show you. But basically, when you get a sharp reversal up like that, there's some time frame where this bar 32 in particular is a 3-bar micro channel, something like 5, 6, and 7. So in a way, I saw 32 as my type of setup. However, 32 is a doji bar, and what are doji bars? Trading ranges. So in trading ranges, where do you want to buy? You want to buy in the lower third and sell in the upper third. So I thought 32 was a trading range bar, but I still thought of it as a 3-bar micro channel. So I bought the lower third of the bar, which is right here. Basically got filled to the tick. And I don't know if I got filled to the tick. I didn't set, a limit order to buy there. I just, when it went to close to the lower third, I just hit buy market. And I ended up scalping out in the upper third of the trading range. And the upper third of that trading range is the high of bar 32. So I bought the lower third of 32 and I scalped out in the upper third. I don't know if that makes sense. If it doesn't, just continue to think about the fact that dojis are trading ranges, and the lower third of them can be a good buy in certain situations, especially when it's a 3-bar micro channel on a lower time frame. I also bought the close of 36. I was looking for basically a second leg up. This whole move is large leg 1. The whole move from bar 2 to bar 21 is a leg 1 on like a 15-minute chart. And so it's important to realize that will probably need a second leg. Obviously, today that was not the case, but most likely the vast majority of the time, this is going to get some sort of second leg. So I thought it was reasonable to buy the close of 36 and expect the second leg up. I was also expecting a pullback. 37 is a lower high major trend reversal, but I thought it was reasonable. Most lower high major trend reversals, most major trend reversals in general end up being pretty minor. So I thought it was reasonable to sit through 37. I thought 38 was disappointing. I wanted 38 to be a better close, and instead, you got this bar, which sold off. And for me, I wanted 39 to be a big bull bar closing on its high. That would convince me that we were going to get the strong second leg up. However, it wasn't. So I just bought small here and I got out here. 39 is interesting in my opinion, because I think that 39 is where, again, 3 straight bear bars. So a lot of times when you get that, it's not as great of a trend as you want it to be. And you can probably still hold betting on a trading range in a second leg. But when I was buying here, my initial premise was that we were going to be in some sort of bull trend. And when we were not in some kind of bull trend, I decided that I didn't want to be in the trade anymore. So I just got out. And then we got a few legs down. 43 looks like a classic beginner, Al Brooks trade. And, it's not the worst trade in the world, but it's probably just better to see if 44 is a good follow through bar. It's lower probability of a trade. It's just really not that great. So you can buy above it and put a stop below it. But if you do that and you get stopped out, you can't be surprised because you took a low probability trade. And I used to have this weird expectation. Excuse me. I need a sip of water. I used to have this weird expectation when I would take low probability trades. I would kind of just expect to win them. I don't know why, but for years it was that way. So if you took 43 and you were upset that you lost, you probably shouldn't be taking trades like 43. If you took 43 and you lost and you didn't really care, then that's probably fine. 44, a bear bar closing near its low. You have to kind of be expecting a pullback. If I bought above 43, I did not. But if I had bought above 43, I think you have to sit through 44. You're trying to basically get 3-to-1 risk reward. So sometimes you're just going to get a trap. And then 45, a bear bar closing near its low. I think it's okay to get out below 45 simply because look at the 43 high. It's right near the 45 high. So what does that tell you? It tells you the bulls who bought here were disappointed enough in this bar that they sold out. You don't know if they're going to be disappointed during the bar, so it's okay to hold through 45, taking a chance you get a big bull bar. But instead you get a bear bar closing near its low. That tells me that bulls are exiting. So I thought 45 was a credible sell. I considered selling 45, but I decided to just wait for the third bar because I thought that if we got a third bear bar, I thought there was a reasonable enough chance we were going to get below the 32 low and stop out the swing bulls. There's also something else to consider. Once we got this, we closed this gap. This gap was keeping the bulls in a possible bull trend. Once we get this, it's a trading range. So in trading ranges, gaps close. So what's the other gap? Right here. So this gap probably has to close. So I thought we might go here. And I was watching 46. I was ready to sell it. And then obviously, I don't know if you were watching during the day, 46 got really, really large in the last minute or two. And I hesitated and I ended up selling the market. And then as this was pulling back, I panicked out of the trade. So I basically sold here and exited here. And then, I basically just said to myself, that was dumb. And then I sold again. So I just basically, during this bar, basically during 47, I sold, I exited, and then I resold. And, everyone panicked out of trade sometimes. It's just kind of part of trading. But, the sell button doesn't go away when you panic out of a trade. So if you panic out of a trade and you immediately say, oh, that was dumb, then you can just, the button's still there. You can just sell again. So I sold and I held and I got, obviously, we went down pretty good. We're pretty far. And I basically exited half of it here, a little bit more than half of it here, and I exited the rest above 50. Why did I exit above 50? Just really, really large risk, to be honest with you. I started probably getting a little bit too emotional about my position size. What needs a second leg that didn't get a second leg? The bar 75 close. So I thought we were probably going to get to the bar 75 close, or I don't know if I should say probably, but I thought there was a reasonable enough chance we would get there. But my positions, the risk just got so big, and I wanted to exit my position size, and I did, and I was up decently on the day, so I just decided basically to let it go. I bought the close of 56, and I scalped out on 57 above the bar 56 high. 56 is a sell climax, and if you think about the logic of a sell climax, well, first off, this is a 4-bar micro channel, 53 through 56, and I know this setup really well. And it's a leg too, so it's not unreasonable to sell, but it's a later leg. So I think if you sold the close of 56, that's fine if you just held and did a good job. But I bought the close of it and scalped out above 56 during 57. I probably don't need to be doing that. So I'm not super in love with, the way that I managed it properly, but I just probably shouldn't be taking that trade. And then at the end of the day, a little bit later, I kind of counted 3 legs down, 1, pullback 2, pullback 3, and then we had a breakout or a reversal on 59 and a follow through bar 60. But I didn't, it wasn't a really great idea, but I bought the close of 60, basically, 1 second, taking a chance that we were going to bounce. And I got 61, but that's probably all I should have expected. And I don't have great calibrated expectations on that, but I took a pretty small position size. So, that's not a trade I'm super confident and comfortable in. The trades that I'm comfortable in, I take a little bit, I suppose, larger position sizes, but I ended up taking a loss on that trade during 62. And a lot of times when you get something and you're surprised that you take a loss, like the traders who are buying for a second leg, surprised they take a loss, they sell the close, we get another leg down. Traders here, they buy, they take a loss, you can sell the close, get another leg down. It is 3 legs down, 50, 56, 64. But, if you're buying above 64, you get a breakout 64, follow through 65. Okay. So you could buy above 64 or the close of 65, but 66 is disappointing. There's a large tail. So if you did buy, I would probably just get out, and that's what happened. I was looking to scalp initially, but 61 closed really strong, and that's the only reason I gave it a chance. Had 61 closed the way that 66 did, I would have just exited at the market, but it closed so strong that I gave it a chance. And I don't know if it's the wrong thing to do, but it's probably just not the best trade in the world for me to take. I thought 57 might get a second leg. I assumed we'd probably get up here. But either way, when you get trapped like this, it's probably okay to just sell that close, and you'll probably be able to make up whatever you lost. So with most of trading, it's that way. If you bought anywhere in here and you get a big surprise bar that stops you out, you can usually just sell the surprise bar. So I had a decent day today. Those were all of my trades. And like I said, I don't really have time for a full daily review today, so I just give a brief overview. Yeah, that's it.